The Finance Ministry has just made an announcement that remember there were 34% tariffs on all US goods coming into China. That's now been increased to 84%.
President Trump is now promising a new 50% tariff on China, on top of the other new tariffs, which are on top of existing tariffs. Combined, this would make U.S. tariffs on imports from China a whopping 104%.
That includes a 104% tariff on China, which, by the way, has responded this morning by hiking their tariffs on U.S. goods to 84%. That is up from the previous 34%.
Let's return to our breaking news now, where China has announced 84% tariffs on American goods coming into China.
The trade war between the United States and China just reached unprecedented heights, and the global economy is holding its breath. Earlier today, China announced an increase in tariffs on American goods, climbing to a staggering 84%, up from the previous 34%. President Trump, in response, vowed to hit China with a new 50% tariff, which is on top of existing sanctions. Combined, this would push U.S. tariffs on imports from China to an eye-watering 125%. And now, in retaliation, China hinted it might ditch its massive holdings of U.S. Treasury bonds, a move some have labeled a financial atomic bomb. Let's unpack this explosive development together, because these decisions won't just shake the economies of two superpowers, they could ripple across the financial systems of the entire globe. For context, tariffs act as taxes on imported goods, meant to either discourage trade or incentivize domestic production. Over the past several years, tariffs have formed the backbone of the ongoing trade rivalry between Washington and Beijing. But today's escalation marks something new, a shift from trade disputes to financial brinkmanship. Here's what makes China's latest move so alarming. Beijing holds roughly between $900 billion and $1.1 trillion in U.S. Treasury bonds, a significant chunk of America's national debt. By selling these bonds, China could disrupt the finely balanced U.S. debt market, pushing up Treasury yields and making borrowing costs for America far more expensive. This would weaken the dollar, make U.S. exports less competitive, and stoke inflation. In other words, this isn't just about tariffs anymore. It's about putting pressure on the cornerstone of America's financial system. Historically, China has refrained from weaponizing its Treasury holdings, largely because doing so would damage its own interests. U.S. bond sales would reduce the value of its remaining reserves and strain the economic interdependence that has defined U.S.-China relations for decades. But the gloves are coming off. Beijing now seems prepared to take on some losses in order to corner Washington. Why now? Experts explain it as a strategy born from desperation and frustration. China's economy has also been under strain due to U.S. tariffs, and Beijing is running out of viable retaliatory tools. By reducing its dollar-denominated reserves, China is also signaling its intent to diversify its assets, pivot away from reliance on the dollar, and potentially expand the role of alternatives like the digital yuan in international trade. Here's how this chaos is already playing out. Wall Street is in turmoil. Traders worldwide are reacting to rumors of China's Treasury bond sale, pushing yields higher and spurring panic selling. Bonds, typically seen as a safe haven investment, are now the epicenter of uncertainty. With prices dropping, investor sentiment has soured and stock markets are showing signs of strain. It doesn't end there. The consequences of these moves could seep into other industries. Higher bond yields could mean higher mortgage rates, cooling down the U.S. housing market. Companies reliant on trade, like agriculture and electronics, could see demand shrink rapidly due to soaring tariffs and supply chain disruptions. Inflation risks would weigh heavily on American consumers, who might face rising prices across the board. But this isn't a one-sided battle. Such an aggressive financial move would hit China too. Its economy depends heavily on exports to the United States. Industries like technology manufacturing and automotive production will likely face steep losses from reduced U.S. demand, which could threaten jobs and growth within China. Analysts across media platforms are calling this a lose-lose scenario, a modern-day economic mutually assured destruction. And yet, it's precisely this high-stakes dynamic that makes this standoff so volatile. Neither side wants to blink first. Trump remains resolute in his statements, calling tariffs a necessary tool for reducing the trade deficit. Beijing, meanwhile, is demanding the removal of tariff walls before any negotiations begin. Both governments are locked in a battle not just for economic dominance but for national pride. So what happens if China does play its trump card? Selling treasury bonds in large quantities could destabilize global financial flows. Japan, the United Kingdom, and other countries that also heavily invest in U.S. debt might panic, fearing a bond market collapse. Investors worldwide could begin shifting assets into safer territories like Europe or Asia, thereby weakening the global dominance of the dollar. What was once a bilateral trade dispute could spiral into a full-blown global financial crisis. Some have even drawn parallels to the protectionist policies of the 1930s and the onset of the Great Depression. Is there room for compromise? On paper, yes. China has expressed an interest in resolving the dispute, open to negotiations when Trump eases tariffs. Trump says he's waiting for their call, but actions so far tell a different story. Each new escalation pushes the possibility of reconciliation further out of reach. If no middle ground is found, the consequences will extend far beyond Beijing and Washington. To put it simply, the stakes couldn't be higher. The U.S. bond market turmoil could lead to higher borrowing costs, inflation, reduced investor confidence, and ultimately, a recession. For China, dumping bonds risks unraveling its own reserve value, damaging its global position. And for the rest of the world, a trade war of this scale risks slowing global growth and destabilizing international markets. So, what do you think? Has China reached its breaking point, or is this bluff designed to make Washington sweat? Will Trump's tariffs backfire, forcing him into compromise, or will Beijing's moves only deepen the divide? One thing is certain, the repercussions of this showdown are far-reaching and uncertain. The global economy may be entering uncharted territory, and everyone is bracing for impact.